we use Steve's method, and we adapted it to a shorter time frame. We just trade a few hours in the morning. We come in, we do a check down, and we do a macro check down and a micro check down, and then we place a trade or we don't place a trade. And so I'll just briefly give you our method again. If you look on your screens, and everybody can print these out and use them, you can do your own. We watch more pairs than most people, but it's because, like I said, we're only in the market for a few hours. And so what we do, we use the levels, as Steve indicated, and we just go in and we look at 1 hour charts really quickly. We only look for obvious levels. And so this check down does not actually take us very long. When we first started doing this check down, nailing these pairs down to the trades with the most potential, the pairs with the most potential for trading, took us about 15 to 20 minutes to get through the sheet. Now it takes us about 5 to 10 minutes. And again, we only look for obvious levels. If we're looking at a 1 hour chart, we put on 6 pairs at a time, and because it just lines out well on the screen. You can do it any way you want, but we just lay out 6 pairs at a time because it lines out really well on the screen. If the levels aren't obvious, if we have to struggle to see, what is this pair doing? It seems really choppy. I can't really tell what level it's in. We don't mark it on the check down. We just don't play with it. So for people who are struggling with the levels, this should actually make it easier for you. Because if you don't see a level, you don't mark the pair. It's just that easy. And so where it says level, oftentimes what we're really looking for, again, is level 3. It doesn't mean that you can't trade the other levels, and we have traded other levels, because sometimes you'll just see a really beautiful stair step set up, and you know this is clearly a level 2, so you know you're waiting for, you know, maybe a railroad track off the 50 or something with a continuation of the move, and when that's, oh, slow down, okay. When that becomes really obvious, then that's a good trade. And so basically we use this sheet, which we call our macro check down, meaning a big picture check down. Sorry, I get all excited. I talk so fast in real life. This feels so slow to me, talking at this speed, but I'll try to stay here. So we use the levels, like Steve said, just to do a broad picture to narrow a pair down. If you go through this macro check down and you get frustrated and you think, I don't see any levels, you can go right to the micro check down and just check down your favorite pairs. Like Steve said, the main thing is the pattern, the pattern, the pattern. So we just use this quickly, like I said, 5-10 minutes to narrow down what pairs show the most potential for trading. And again, we're really looking for level 3s, but if we just see a super level 1 or 2 that's just screaming trade me, then we'll take it, and where it says level, I just look, and if it looks good, I put the level. Level 3, like I might mark level 3 next to the Aussie dollar, and then again next to the euro dollar, and then I might see it again on the pound dollar. So when I see that, what am I seeing? They're working the dollar. All the dollar pairs are at level 3. And that's going to show you that fractional disparity really clearly when you start doing this. You're going to notice that they're working a certain currency, and you'll be able to identify that and play it against them. So once we're done with this, the next step over says spread and stop. We don't use 23 pips. We use 7. And again, Steve, that's just a matter of style. We used to use 23. Now that we're better at seeing the highs and lows and where we should and shouldn't enter, we've dropped it down to 7. So that's just up to you. You can use 23 or 7, and then you need to add the spread. And you don't even need to use this part. You don't need to. That's just, I add the spread in plus 7, and that's where my stop belongs. You add that to price, and that's where your stop belongs. So I just like to go in prepared and know where my stop is going to be, because it makes it easier for me to know if I have a good entry or not. If I know my stop is at, you know, I need to put it at 30.30, and I see that I can enter short at 0.20, I know I'm only 10 pips away from where my stop is going to be, or 12 pips away or 15 pips away. We like to get within 20 pips of where our stop's going to be, which usually means that we need to get within 10 pips of the high or the low. We used to go for 20, so you can start as much as 30 pips away. Since we're counter trend traders, if you want to keep that one-to-one balance and you know that you're going for between 35 and 50 pips, you want to keep your stop between 35 and 50 pips away from your entry point. And right now we usually enter within 20 pips of the stop. So just keep practicing it and you'll get better at it. Where it says 1 hour trend and then T or CT, you can tell if you're looking at the 1 hour chart already. So we keep it really simple. If the blue is above the white, it's an uptrend. If the blue is below the white, it's a downtrend. That's how simple it is for us. Now, do people look at 4 hour charts, daily charts, and do they conflict sometimes? Yeah. We're only in the market for 2 or 3 hours, so I don't really care what the 4 hour chart's doing. I'm looking at the 1 hour trend because I'm going to be in there for 2 or 3 hours. I'm not in there for 6 hours at a time like you can be in the London market, because us Americans, we just are into instant gratification and our market moves faster. So we're only in there a couple or 3 hours. And although it's a much more aggressive and vicious market too, but Zen and I are personality type, we kind of like that anyway. So that's how we use that. You check the level. We're looking for level 3. Again, if you see a beautiful level 2 or level 1 setup that just looks really good to you, feel free to mark it. But we're really just glancing quickly looking for level 3s, because typically that's what you're going to be trading in the American market, is a reversal move. So that's what we look for. And again, if you want, you can just skip the next step if you want to, but I like to know where my stop is going to be. So I look at the spread, which you guys have that on your 15-minute chart. Big price, it'll show the spread. And so I just add the spread in there and look at where my stop is going to be according to the high or the low of the day. And then we look at the 1 hour trend, up or down. I just put an arrow, an up arrow or a down arrow there. And then if I'm at level 3, looking to go short and the trend is up, then I'm counter trend trading. So then I would put a CT. And then if I'm at level 3 on the low side and I'm looking to go long and the trend is up, then I'm trend trading. And the reason I put those down, if I'm trading trend or counter trend, so I know where my profit target's going to be. And we have found that most often in the American market, your profit target is going to be the 50 on the 15-minute chart for counter trend trading. That's the profit target that we use anyway, because it's the safest. We've just spent too many times. We've gone into a trade and thought, well, maybe it'll run to the Mayo, which about 3 out of 10 times it does. But you wait for it to go to the Mayo, and it just drops so quickly from the 50 that you wind up with 10 or 15 pips profit instead of 35 or 50. So we just take the safe trade and trade it back to the 50, and it's usually between 35 and 50 pips. If I'm going to enter a trade and I see that I can't pick up at least 35 pips trading it back to the 50, I just don't take the trade. It's just not worth my time. So, and if I'm trading with the trend, I use the pivots as a profit target. We know that it should be M2, M4, M1, M3, or even the daily high or the ADR. If those are all lining up, then I know where my profit target should be. But again, if I'm trend, I'll use pivots, and this is us. This is all part of Steve's methods, but he does, if you look at the notes, he gives you different ways to take a profit target. One of them is using the pivots. One of them is using the EMAs, so exponential moving averages. So it's up to you. I mean, look at your notes and figure out what's more comfortable for you. We just, if it's trend, we like to use the pivots, and if it's counter trend, we like to use the 50, which is the blue EMA. And then I just take any notes on there that I see. That's just for you, for notes. And down at the bottom where it says, there's a little, the triple stars are the majors, And I like to star those because those are ones that are particularly active currency pairs during the American market. And then I have those majors listed, those major currencies underneath. And sometimes it's really, really obvious which currency they're working that's really strong and which one's really weak. And so I'll just mark under there if I see a bunch of level 3 shorts on the dollar, then I'll mark that the dollar's weak. I'll just write on there weak so that I know when I'm watching that the dollar is showing that it's going to be really weak today. Or maybe the Aussie looks like it's really strong today. I'll just write strong. I try to see if I can identify the strong pair and the weak pair because that's the pair that's most likely to move when I see the market maker pattern. And that's why I like to mark those. And that's how we use that macro check down. And as soon as we're done with that, and again, that takes about 5 to 10 minutes nowadays for us. It'll probably take you 15 or 20 when you first start. And you know what's hard? Get disciplined. The best traders are disciplined. What we found to be really difficult is that we would see, as we were checking down, a couple of pairs that looked really good, and then we wouldn't look at any other pairs, and we just go and start staring at those 2 pairs. So the best advice I could give you if you're going to do this is to trade disciplined. Once you get really good at it, it only takes you 5 or 10 minutes to check down every one of those pairs on the levels. And so I would recommend that you do that because we kept missing really good trades focusing on these 2 that we saw right at the beginning. So make sure you're finishing your check down and really finding the best pairs that you can trade. That's just one of the things that we learned. Now I have our micro check down. Now you've hunted, usually when we do the check downs, we'll wind up with between 6 and 9 pairs that we've nailed it down to, that we really want to look at for good trades. So we take all those pairs and in 5 to 10 minutes we'll nail it down to 6 to 9 pairs is typically what happens. Sometimes you'll only wind up with 3 or 4 pairs, but on average you're going to wind up with between 6 and 9 pairs once you do that check down. And so then we look at it more microscopically. Now we're looking for an actual entry on a pair. We're now looking for the market maker pattern. And this is why I was saying at the beginning, if the levels are frustrating you, just go straight to this sheet right here. And we put this sheet together actually from a check down list that Steve gave us a long time ago in class. So this is really no different. We just mined it out a little bit differently for us on our spreadsheet program. And you guys can take this information and line it out differently for you and your style too. But it's all the stuff that Steve is teaching anyway. It's really just training your eye to remember to look at everything on each pair. Don't get stuck on the level. Don't get stuck on the ADR marker. Don't get stuck on, oh, it's in the stop hunt zone, the green box, or hey, don't get stuck on, I see an M on a pivot. You really have to look at the whole picture. And so if you look at these, as you look at the pairs and you get in the habit of checking everything, after a while you'll just do it out of habit. And you won't. I remember the first time that I took Steve's class, I really just walked away with M's and W's, and I was trading every M and W out there. And for those of you that have done that, you know that that's not how the method works. So we put this together just to help train our minds, and we still use it to this day. We mark up this check down list before we enter, and even though it's automatic for us, just as part of the discipline of trading, we still mark this up. And so if you look across the top, you'll see a 1 hour and a 15-minute. You need to be looking on the 1 hour and the 15-minute chart and checking these off. You look at TDI, and I just take a look at it. And if I notice that it's at an overbought or an oversold level, I just write the level in there. If I see that it's at the 32, then on the 1 hour, I'll put 32 on the 1 hour, and it might be, below the 32 on the 15-minute. I'll put minus 32. And I just do it real quick. It's just quick. It's just a quick check down. It's not an over-analyzation, because that's what we tend to do. we tend to see stuff that we don't really see, or we're trying to make ourselves trade a certain pair that's our favorite pair, and maybe that pair just isn't working that day, but we start all of a sudden, I'm sure I can't be the only one that took a trade that didn't work out too well, and then you looked back after you took it and thought to yourself, why did I even take that trade? And that's why we learned to get disciplined. We were just like, you know what, the paper doesn't lie. So we just look, and if we look at TDI and just kind of mark where it's at, if it's at a good zone. If it's at the 50, I don't write down 50 on there. That's not worth looking at for a trade yet. If it's just at the 50, it's not doing anything. So I don't put anything on there. I just skip it. But if it's at a good overbought or oversold level, I'll write it in there on the 1 hour and the 15-minute. You look at the trend. The trend showing up on the 1 hour and down on the 15-minute, there's like a problem there. So I want to make sure that the trend is matching, and I'll put in there that if we're trading trend or counter trend, which we saw in the first, you looked at it in your macro check down. So I'll just quickly write a T or a CT in there, just so I know where my profit target is should I decide to trade that pair. So again, TDI, if it's at overbought or oversold, I write down the level. Trend, I'm writing in trend or counter trend. If it's in the stop hunt zone, I just put a check. I don't bother to write yes or no. I just put a little check on there, and I know it's in the stop hunt zone. If it's in a strike zone, which is more than one indicator lining up to form a support or resistance level. So in other words, you might have Mayo lined up at M3 and with the daily high, and it's formed a hammer there. So that's a strike zone. I have a hammer and a strike zone. So again, I just put a check mark. I just look real quick to see if there's a strike zone anywhere. If I'm looking to go short, and remember we put our arrows level 3. If it's a level 3, I'll put down or up on my check down. So level 3 down, level 3 up, which way I'm looking to go. So if I see a strike zone at M3 and I know I'm looking to go short, I put a check mark right there. It's that simple. You're just putting check marks on or leaving it blank. Check mark or blank. So that's what the strike zone is. And then if I see market maker candles, do I see any railroad tracks? Do I see a hammer? Do I see a doji? Am I seeing an M or a W formation? If I see any market maker candles, I just put a check mark. If I don't, I leave it blank. I look to see if it's on a pivot that it should be. So if I'm seeing market maker candles at M3, I'm looking to go short and it's at M3, I put a check mark. Just put a check mark on there. Do I see divergence? Check or no check. Do I see 3 strikes to the high or the low? Check or no check. How long has it been at the high or low? And this one I'll write 15 minutes, 30 minutes, 45 minutes. Just a quick little 30, 45, 60, however long it's been at the high or the low. Has the ADR marker been hit? Check or no check. And again, this is going to take you a couple minutes once you get good to it or good at it. It's only going to take a couple minutes for each pair to just roll through these. When you first start doing it, and again, don't let yourself get sidetracked. You'll see 2 or 3 line up, and then you'll just hunt that pair. And it's okay if you see a good entry, look at it. If you want to enter, set your stop, set your profit target, and then check down the next one. Don't sit there and stare at that pair. You've either made a good decision or not. And if you have a proper stop in place, you don't have to worry about it. So go check down the rest of the pairs, because we have spent too many times when we were first learning to do this, we would place a trade because we'd see something right away, and we'd place a trade. It was a great trade, and then we'd see that we missed 2 or 3 more. So again, be disciplined. Don't stare at those candles forming. And I know I can't be the only one who did that in the beginning. You get all wrapped up in it, and you just stare at the 15-minute candle forming, which is ridiculous. Once you see that candle, you can leave it alone for 15 minutes. By the time you see a candle forming and you get good at this check down, you could be done checking down the rest of your list by the time that candle closes. So again, be disciplined. And you're just going to write your pairs in there. Oh, stop hunt zone. Okay, the stop hunt zone is that indicator that is the green box. And that indicator is designed to be 25 to 50 pips off of the high and the low. Now, we don't have to have that indicator on there to measure are we 25 to 50 pips off the high or the low, because that's where market makers will typically run a stop hunt. It's 25 to 50 pips off the high or the low. And even if you enter and you're wrong, say you enter short and it breaks the low of the day, you wait 25 to 50 pips. That's part of Steve's method. And you wait for those market maker candles to form again. But we have an indicator that I really like because I can go brain dead now instead of measuring. It's just sitting there. It's green and it's plain as day if those candles hit into that zone. So that's what I mean by stop hunt zone, is price inside the stop hunt zone, check or no check. So hopefully that answered that question. And again, we just check these down. And when you do it like this, when you just put a check or no check or no check, it will be painfully obvious which are the good pairs to look at for entering. You'll get, I guarantee you, you'll go from 6 to 9 pairs on the macro check down to 2 to 4 pairs on the micro check down that you're going to be looking at trading for the day. And those are going to be really strong trades. And that's basically what Zen and I do. And so I am going to hand Zen's microphone back to him because he's going to pull up a couple of charts on things that we are looking for and trades that we have made using these notes. And seriously, this is all that we do. We wanted to develop something where we could stop being frustrated and we could stop thinking so hard all the time, and we could just kind of run on automatic. And this does it for us. We really were to a point where we can just do the check down, boom, 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 just quick, because we practiced it and done it a lot. And so it's easy for us to trade. It is plain as day when you do stuff like this to see what trades you should be making. And so I'm going to hand the phone or the microphone back over to Zen, and it was nice speaking to all you guys. And I'm sorry if I sound a little boring. I'm just not used to speaking slowly. So hopefully I'll get to see you guys live and talk to you at some of the events that we have coming up. And I want to just wish you all happy trading, and hopefully something that we said helps. I hope that we can help you guys that want to trade the American market, help you learn to be able to do that. It's a really fun market to trade, in my opinion, because it's more aggressive and faster moving. And it's definitely something that you can do and you can conquer and make money. So I'll hand the microphone over to Zen and let him show you our check downs in action on some charts.
Okay, guys. Boy, you know what? I feel a little bit unworthy. We had 3 fantastic teachers tonight with Steve Carr and Diana. I guess I'm the cleanup Adam, but sheesh, I'm feeling a little small after going behind those guys. Anyway, I wanted to share a couple things with you, some of the setups, how Diana and I look at it. She gave you the check downs, and we do go through the check downs, and I wanted to show you kind of some before and afters. So if you look at the chart that I have up right now, and you know, I'm pretty upset because I took today off to go out to breakfast with my wife, and we messed around a little bit and kind of played around. And anyway, there were some great setups today that I ended up missing, but I'm going to highlight a few of them for you. So if you look at the chart right now, we're looking at AJ, and this is just a picture-perfect setup that Steve talks about, not only for the London session, but also for us that like to trade the U.S. session. Here, out of the blue box, we have 3 swipes, 1, 2, and this is pretty much considered a swipe here. It's a railroad track off the Mayo line, and then it fades away about 100 pips. And so what happened was it bottomed out here, then it started to move up and retested the bottom and took off. Now if I take my next chart and I bring it over, you can see what we were looking at here. This came down and formed a W. The entry is right here on the second leg. And what's the take profit or the profit target when you trade the reversals in the U.S. session? It's the 50 EMA. So if you were to pick this up down here at the bottom, and generally speaking, we're looking for 35 to 50 pips. Happy with 35, real happy with 50. Pick it up here at the second leg, went all the way here to the water line. Could have filled your order, would have been done. But like Diana was telling a little bit earlier, sometimes it does happen to move up to the male line. In this case, it did. And guess what? We probably would have just missed that one today. Going to bring up another example for you now. Okay, here's CJ. And again, look at the perfect setup. We've got 3 swipes to the high, 1, 2, 3. This is exactly what Steve teaches us, right? He teaches us to look for the false move. And then it came down, retested right here. So we got that nice M and just faded away to the bottom. Now, if you look at this particular candle, you see here that it hit the bottom, rose back up and bottomed out. So what does that look like for those of you that are having trouble seeing it? There we go. First leg of the W, second leg. So where would the entry be on this? It's this green candle right here. Green candle. And where are we looking to take off our profit? First profit's right here, right at the water line. Now, could this go up and touch the male? Here's another case. Well, you know what? It pretty much made it to the male line. So we, meaning Diane and I, if I would have taken this trade, I would have left some money on the table. But guess what? I'd have been filled at 50 pips in a matter of just a few hours. I'd have been on my way. Happy to have that. Here's another example. And this was just 5 picture-perfect trades just today. These are the kind of trades that Diane and I look for. We're looking for the best setups, the highest probability trades. And all of these trades, they were counter trend trades at level 3. Again, we see right here, it faded away. It was a straightaway trade and just dropped out to the bottom. And here's that same chart marked up. So you can see again, it came down, formed a W, went up, retested because there's some more volume going on here. Entries right here, the second leg. Our target is the 50 EMA. That's a quick, easy 50, 55 pips right there. Here's another example for you. And again, I mean, the setups were absolutely beautiful for the London and the U.S. session. This is EJ coming right out of the box. 1, 2, 3 swipes. Hits the male line and just fades away. There's nothing there. Just drops all night long. So let's take a look for us U.S. people what we're looking at. Guess what? There's a peak formation right here at the bottom. It bottomed out. It retested twice. We got a W here on TDI, and the thing just took off. This one ran 93 pips in the session. Here's another case where, a lot of times Diane and I used to trade it to the male, but there were times where it'd back up and we'd end up losing pips. And guess what, man? If you can consistently, like Steve teaches, pull down 50 pips, you're going to be a happy camper, man. There's tons of money to be made. I'm going to give you one last example. And again, this was the euro from this morning. Look at this picture-perfect setup. All you London people, I'm sure you all crushed this one, didn't you? 1, 2, 3 swipes to the high. Gives us a nice M formation. And then it just faded away. What's that look like in the U.S. session? What are we looking for? Guess what? There's a peak formation, railroad tracks. It bottomed out right here. Nothing but green sky all the way here. Got a kind of a lazy shark fin here. It's below the 32 on TDI. And what's our profit, guys? It's real simple. We're looking to take profit at the 50 EMA. On counter trend trades, it's always the 50 for us. Now, if you want to get aggressive and go a little further, hey, go for it. Okay, I think that's pretty much all we have. I wanted to cover just a couple other things with you real quick. This recording will be posted in the next day or so in the forum, and we hope that it helps you. I want to thank, first of all, Steve. You know, Diane and I, everything that we've learned from Steve. He's taught us. We're doing very well. There's lots of people in our group that are just crushing the market. We're real proud of you. If some of you are struggling, you have to let us know. Reach out, send us an email, grab some of these other guys that are doing really good, and let's make everybody successful. That's the name of the game.
These are some great questions. Will the checklist work for the London also? Yes, because it's Steve's system. But if you're working the London, you need to add the 4-hour trend in there. You need to work that in because you're working a longer time frame. If you look at the charts that we showed you, you can see that we trade the beginning of that American box is where Zen and I trade. And you guys, the London people trade 4 to 6 hours. We trade 2 to 3. So you're going to want to add that. Steve has a setup that he teaches in class that has the 4-hour chart in there to help with trends. So you're going to want to add that in. So that's, yes, it will work for the London because you're checking the same thing. You're looking for the market maker pattern. And this is all part of Steve's stuff. It's just ADR markers, strike zones, what's that called? Not the strike zone, but the other zone. The market, the 25 to 50 pips off the high or the low, the stop hunt zone. Thank you. And Zen, do you trade it before gap time? No, a lot of times you're going to get the trade just before the gap time. You're going to get that reversal just before the gap time. Just because of our schedules, we don't. So we have to get, a lot of times we'll get the retest. If you look on Zen's chart, you'll see that oftentimes there's a retest of that high, the second leg of the W. He showed you a couple of them that had peak formations, and we would miss those trades because those peak formations came at about 6 o'clock in the morning. But all those W's, all those second leg W's came at like 9 o'clock, 9:30 this morning. And so we trade stuff like that just because of our schedule. With the kids going to school and stuff like that, we just trade around our schedules. So the thing that's really, really, really cool about Steve's method, the market maker method, is that it allows you to identify where you're at in the market. As long as you know the method itself really well, which we can't really help you study your own notes. That's sorry to be blunt, but that's something you have to do on your own. You have to study your own notes and know the method. But if you know the method, you're able to identify where you're at and trade on the schedule that you have to trade on. So it works for that. So we start at 8:30 Eastern Standard Time.
Okay, Kevin, I wanted to answer your question real quick. Kevin's asking, can you not trade the London 2 or 3 hours like you do the U.S.? Absolutely. That's what Steve teaches. Listen, if you're looking at this, if you don't see the setup in 2 or 3 hours, go to bed. Go out to eat, go do something else, and come back and look at it later. That's it. Do not sit there all day and all night try to find a trade. You're going to get crushed. It's a 2 to 3 hour time window, either during the London or during the U.S., and that's it. If the setups are there, we take them. If they're not there, we go out. Now, Dana was asking, where'd Dana's question go? Okay, well, first, Dana was asking, because of our schedule, do we have other jobs or anything like that? No, Dana, we don't have other jobs. Diane and I are partners with Steve and his wife, Heidi. Just a little bit of background on us. We're also in the film business. We have 6 or 7 films at various stages of development, so that consumes a lot of our time. And hopefully in the next year or so, you'll see some of the stuff that we're working on the big screen. But anyway, we don't have other jobs. That's the time frame that dedicated because of our kids and the window and the time frame that we want to trade. Listen, just like Steve, we don't want to be here all day and all night trading. We now understand the behavior of the market. We go in, we make our money, and we go on with our day. And that's the goal that you should have. Nobody should want to sit around all day and all night trying to trade to make some money. Get in, get to the point, make your money, and leave. Okay, Ralph's asking, do you do the macro and micro checkdowns multiple times during the morning? No, we do not, Ralph. We do it one time if the setups are there. We take them. If they're not there, guess what I do? I say, hey, honey, do you want to go to Disney today? And we go to Disney, or we go out to eat, or we do something else. Okay, Gan is asking if we can explain the V formation. What that is basically it's a W that didn't build the second legs. We just, that's what it is. It's a half a W. Aaron Rutledge is asking how we met Steve. That's a good question. Aaron, about 2.5 years ago, Steve and I both worked at a different venue. Steve was coming in to be one of our instructors. Steve and I and Diane sat on the back row and were BSing with each other during the whole class for a few days, and we became friends. I think what really did it was, though, the first night we were locking up the office after the class and went out to the car, and Steve had locked his keys in the car. And so his wife was about a little over an hour away, and he didn't want to bother her, so we ended up going down to the dealership with Steve and helping him out, and that's just where our friendship started. We've been pretty good friends ever since. It's been a great relationship with those guys and us. Okay, Slaticka's asking about the MAs. Slatica, that's covered in the class. I know that you're new to us, but it's 51350 200. That's what we use. EMAs. Okay, guys, if you look, let's see, the class schedule. Somebody's asking for that. Okay, let me give it to you 1 second here. We've got a class going on in New York. That's going to be a live class. That's going to be June 4th through the 8th. Now, we kind of scaled down to 4 days, but we've added back in that 5th day because we really, really want people to have their scripts, their indicators, their computers all set. We want them to be savvy with the forum. We want them to have and be savvy with all the different things that we offer, because we want them really to come to Steve's class prepared to learn from Steve. We don't want them messing around and being worried about their scripts, their indicators, different things. So we're back to 5 days. So we have a class June 4th through the 8th. We have a class, and that's going to be on the New Jersey side of New York, New Jersey, probably right near the airport there. We're working on a location. Hopefully we'll have that done by next week. We will be doing a web class in July. That will be the 16th through the 20th. In September 10th through the 14th, we are going to do another live class. We have not determined what the location is going to be yet. And we're also considering doing a web class that last week in May. I think it was the 21st through the 26th, something like that. So the Sunday sessions, that's a good question. I believe the sessions are going to run 45 minutes to an hour on Sundays. If somebody's asking for us to post some of our trades in the forum, we will do our best to do that. When I remember to do it, I'll be happy to do it. Okay, guys, it's getting late here in Florida, and we're happy that you're all with us. Listen, again, I can't emphasize it. If you're struggling, you've got to speak up, because we want to help you. If we don't know that you're struggling, there's nothing we can do for you. Okay, guys, we want to thank our friends also at Compass for jumping in here, Casey and Kim. Also, big thanks to Steve, Diana, and Carr. All three of them are fantastic teachers. Let me tell you, I don't think we could find a better venue of teachers than those three people, and I mean that. You guys have a great night, and we'll talk to you soon.